Guys, how are you? How are you doing? This is Shocks and this is ShocksCapital FX YouTube channel. What I want to show you today is easy. I want to show you how to understand and trade volatility indices or Deriv indices on M15, M5, any time frame using the breaker and the fair value gap as your strategies. So I'm going to show you this strategy on the charts, but first, before we go to the charts, I will show you what a fair value gap is so that you may understand, right? Then you come back and combine that with a breaker and get out with a powerful strategy that you can use any day. Right, so a fair value gap, so from the word, it's a gap, right? So it's a three candle formation, right? It's a three candle setup that gives birth to what we call a fair value gap. So from this candle formation that you see on your screen right now, you clearly see that this is a descending pattern, right? Where price is going down. So price is going down. We have candle number one, this one, then we have candle number two, and we have candle number three. Remember, it's a three candle pattern, right? So what you are interested in is the wicks of the first candle and the wicks of the last candle, right, in relation with the middle candle. So you understand what we are saying. So you mark this wick, right, of the last candle, and you mark the opening wick of the last candle. So the first and the last. The first you mark this down one, then the last one you mark this up one. So this gap that remains here is what we term the fair value gap. So we are going to be using this. This is a very powerful setup, and you will see what I'm talking about. So let's go back to charts and I will show you how you trade this and the rules associated with this. Stay until the end so that I will show you what more rules and confluences that you need to trade this particular setup. Let's go back to charts. Right, so we are starting on V75. This is the M12 time frame. So if you are using the MT5, you know that you have a time frame that looks like this. So this is what you're talking about here. Number one, what do you need? You need an anchor. So this is an anchor. So from your trading or your knowledge, your research, you know that an anchor is a formation that can be a double top, a double bottom, a triple top, a triple bottom, or a head and shoulders, or an inverted head and shoulders. So from what you are seeing here, this is a triple bottom formation, and this is our anchor. So to understand an anchor again, you have to see three strikes to that anchor, right? You have to see three pushes, one push, two push, and the third push. Then you have an anchor. Then you have you have a breaker. So we are more worried about this breaker, the yellow breaker, but I will first show you the fair value gap. So this strategy, it is a breaker plus the fair value gap. If you don't have a fair value gap and you have a breaker, that setup is not complete. You need a breaker. Then in that breaker, you have to have a fair value gap, right? So I'll show you the fair value gap that I see in this formation. So you have this candle and this candle and this candle. So this is your fair value gap, right? This is the wick of the last candle, then the last wick of the first candle. So this is your fair value gap, right? So in that fair value gap, you have to find a breaker. So this is your breaker. So the fair value gap is for confluence purposes. Then the breaker, you use that one for for stop losses. So you enter your trade in this yellow zone, then your stop loss is going below this below this breaker right here. So fair value gap, breaker, then price moves back into the breaker, and your stop loss is the purple line as you see in this example. And what is your take profit? Your take profit is the next high as you see like this. So this is what we are doing, and I'm going to show you another example on V10. So this works on any indices. That's why I'm saying this works for all indices, right? Across the divide, right? So what you are seeing here is number one, we have what you call an anchor. Remember, an anchor, you have to have three strikes to the low, right? 1, 2, and the last strike, which is this one, right? Then we have an anchor. After that, after the anchor, what do we have? We have a breaker, and inside that breaker we have to have a fair value gap. Let me zoom in so that you guys can clearly see where my fair value gap is in this particular one, right? So we have this week, right? Then we have this week, then we have that week, right? So this gap between these 2 weeks is our fair value gap. So that's confluence, right? The breaker, your stop loss is going where? Is going below the breaker, and you get in beginning of the fair value gap, and you go. So what are you targeting? Again, you go for for the high. You go for the next high that you see, and I'm going for this high, and we also have that high. So it all depends on you, on what you are doing, and you have to have 3 strikes to the high. Let's go on V100 1S. So spend our time here. Let's spend our time looking at this. Number one, what do we say? We have to have an anchor, and the type of anchor that we have here is a head and shoulders, where we are having this left shoulder, and we have this right shoulder, and we have this head. So this is the formation, or this is the anchor, right? So remember, to validate this anchor, you have to have 3 pushes to that anchor, 2, and the third push. So we have 1 push, 2 push, 3 push, and this is what price is doing to the anchor. So after that, what are you going to see? You're going to see that you are going to have a breaker, and this is your breaker, the yellow zone. But inside that breaker, you have to have what we are calling the fair value gap for confluence, right? If you don't have a fair value gap, you are not going to take that trade. So this is your fair value gap, and this is your breaker. So price breaks and comes back to retest. So if you want to use limits, you can use limits here, and you get your trade. Then you are going for the next for the next low. This is the next low. So the next low is determined by these 3 pushes. You see, we have, okay, let's call them levels. You have level 1, right? Then we have level 2, then we have level 3, then anchor. So this is BTMM 101, right? You understand what I'm talking about, right? So we have 1 push, 2 push, 3 push, then anchor, then you have a breaker and a fair value gap. The setup is complete. What you just have to do is to hold until you get to your target, and your target is here, right? This is your target, where the level started from, the first level started from. So this is your anchor, and this is what you are doing here, right? So let's go and look at another example. So if you have any questions pertaining this setup, guys, shoot in the comments down below. I will get to you. And if you don't have an account to trade this, remember, we are in November. Very soon we'll be in December and January. These are months that you cannot trade forex pairs. You cannot trade forex pairs, right? You need to move over to Deriv. And if you don't have an account and you want to trade Deriv, in the description down below are links to you opening an account and trading with the best broker that offers synthetic indices on this planet. So this is what we are doing. So thanks to Deriv, we can trade this. And let's go to V25 and try to see what we are having here. So this is M12 again, and from what you are seeing here, we have a breaker, and we have the anchor, and 1, 2, 3, we have those 3 pushes to the anchor. So number 1, there's level 1, there's level 2, there's level 3, then an anchor. So what happens is we have a breaker here. So what do we want to see? We want to see a fair value gap. Remember, the way I am explaining this is the same way you are going to be to be going and understanding or trying to get this on your charts, right? So your stop loss goes above the breaker. You take your trade as price gets to the fair value gap. And what are you doing for the take profit? For the take profit, you are going for for these lows right here. And this is what you are doing, guys. This is what you are doing, and this is how you are looking at these particular trades. And get your trade, get your take profit, and here you go. So this is the setup. This is the setup. Let me show you another example that happened today. You guys can clearly see what you're talking about and clearly understand for the last time. So this is a level, all right? This is another level, and this is another level. So what is the anchor? The anchor is an inverted head and shoulder, where we are having left shoulder, and we are having right shoulder, and we are having our head right here. So what is where is the breaker, right? So this one marked here is not the breaker, right? So the breaker, remember, the breaker is the order block that is responsible for the last push to this last shoulder here. So this is your breaker, right? So this is your breaker. This being your breaker, right? Where is the fair value gap? Remember, in this moment we did not have a fair value gap here, so we are not trading that. So remember, the fair value gap and the breaker have to be in the same region. So we have this fair value gap right here, where we are considering these 3 candles, the green one, the green one, and the green one. So these this is your fair value gap, and see what price did. Price came and retested that. So your entry is at the beginning of the fair value gap, and your stop loss is going below the breaker, and this is your trade. What are you targeting? You are targeting the next high, and this is the next high. This would be your take profit, and if you are a bit more ambitious, you will be looking at this particular zone. So remember, this is the strategy, and you guys can profit if you follow this religiously. And if you don't understand, go back to your charts, try to see this on any time frame, on any pair, on anything that you want to trade, guys. I hope this was helpful. I'll see you in the next video. Cheers. Trade what you see. Shocks out.